Welcome to lecture 4 of our advanced course. In the previous lecture, we talked about an in-depth of levels counting. So I'm sure you've tried to actually count levels on your own on different types of assets. So in this lecture, we are going to talk about resets as well as order blocks and order flow. So we said that actually in the last lecture, after 3 levels have been completed and before the higher time frame cycle has been completed, we need resets in between the smaller time frame cycles. Resets are basically cycle resets. Then order blocks is actually a new topic that we'll actually introduce today. So as defined earlier, a reset is a cycle restart. In a complete cycle, we'll have 2 resets. By that, we said any higher time frame of choice will always consist 3 levels of its preceding time frame. Like in this case, if we take an H4 time frame, we have level 1, level 2, and level 3 of the H4 time frame. If we switch this to the previous time frame, which is the H1, we'll have 1, 2, and 3, like that. And we in between the cycles, we have a reset, like that, to complete the cycle. So basically, resets are cycle restarts in between these points, like that. So resets occurs at the 200 EMA. If you remember vividly, in our early parts, we actually say the 200 EMA is the baseline, and price will always come back to the baseline. Resets will also occur at 800 EMA as well as on order block. So let's actually see how they occur on each region that we have mentioned. So here's a reset example on 200 EMA. After we had level 1, level 2, and level 3, we can see that the market actually came back to the 200 EMA to reset. So basically, we won't expect a perfect touch of the 200 EMA, but to know that we'll have a region around the 200 EMA. The only thing that will give us entry confidence is pattern recognition that we'll talk about in our later lectures. So in this case, we had this as a reset on the 200 EMA in white, and then the price actually went up like that. Another example, this one is actually an intraday cycle, as we all know that the H1 level will consist of 3 M15 levels. So these are the levels that we were trying to mark on the M15 time frame to actually fill an H1 level. So in this case, we had level 1, level 2, and level 3. Therefore, to continue with our flow, we had a reset on the 200 EMA to cycle restart. So basically, that is what we'll be expecting to see resets on the 200 EMA. However, there are other regions like order blocks where we actually expect more accurate resets. So if you master the order blocks, you would see that you'll be able to actually trade with high accuracy. So order block is considered a market behavior that indicates the pile up of orders from banks and institutions. So the central banks and financial institutions are the ones that mainly drive the forex market. So the market tends to make a sharp move on either side once the order block is completed. So the key behind order blocks is that it includes what giants institutions are actually doing. So on order blocks, we are trying to get the points where big financial institutions. Do you suffer from analysis paralysis? We are excited to introduce Bunnex Investment Group Daily Market Analysis, conducted on Zoom from Mondays to Fridays at 6 a.m. GMT. The watchlist is given, explained in detail, and anticipations are made, which you can follow through on your own. Join this particular movement at $50 per month. Have staked their positions. So it's actually something that is obvious to want to know how order blocks arise on the charts. So we'll actually go into detail on this part. So market makers, which are large financial institutions, need to trade wisely. Otherwise, they will also lose money to retail traders. So by wisely, we are saying these financial institutions has access to large amounts of capital. And as we defined market makers, we said they can actually open positions that can influence market flow. So let's take, for instance, market makers wants to buy GBP USD, right? For every buyer in the market, there should be a corresponding seller. So if you are pressing buy on your MT4 platform, TradingView, or any trading platform, you would have actually met someone who is going to sell to you. So for every buy transaction, there should be a corresponding sell transaction. So with that process, we call that your order has been filled. So in the case of market makers, for them to buy or to sell, they need corresponding buyers and corresponding sellers. So in that case, they will be able to fill their contracts. So if they decide to buy or sell any particular asset with high volume, they need to split their positions. So since they want to buy with high volume, they cannot just do it with a large chunk or a large sum of contracts at once. Otherwise, their positions will be left unfilled. So buying all in will result in their contracts not filled and will result in sharp spikes of price that allow retail traders to enter the market. So by sharp spikes, we are saying if they buy all in on GBP USD, let's say let's take this for as an example, you'd see that it may result by actually giving us probably green candles or for the next 5 hours without any retracement. So that will actually allow us as retail traders to enter within the market using their liquid. So this will affect negatively on their profits. So to do wisely or to avoid this, they will split their positions. Say they want to ultimately buy 100k portion of Euro USD. They can split it into two 50k portions. So by this, they actually say, let's take for instance, I'm a trader at Danske Bank. My manager has told me that today we want to buy 100k portions of Euro USD. Basing on the fundamentals that we have received, Euro is going to be strengthening against the dollar. So since you have the proficiency to trade, what are we going to do? I would say we are going to buy 50,000 lots at $19, right? 50,000 lots at $19. So at $19, I'm going to press buy, and it's going to be 50,000 at $19. And in this case, we as retail traders probably will be using a maximum of 25 lots, 10 lots. Some other will be actually using micro lots, which are 0.01. So since I'm a hedge fund, in this case, I'm going to use 50,000 lots, and it's buy. So whenever I get into the market, usually it will actually result with an impulsive move going up in this case. So after going up, what is my next move? My next move is now to call probably Dutch Bank and tell them that I've bought 50k portion of Euro USD. May you please cyclic trade for me to return to the same price? So Danske Bank, Dutch Bank, I'm sorry, will actually sell the same market with a higher value than my initial one, so that the price will actually come back and reach my initial position. Then at this point, that is when I'm going to introduce another 50,000, so that I'll have an ultimately 100,000. Since these two positions are now bigger than what Dutch Bank has introduced in the system, Dutch Bank is going to see the market come back to their initial point of entry. And as they come to their point of initial entry, probably they will close. They decide to close at this point, or decide to close when they reach this point. So this way, the first 50,000 order that I have placed is what will create what we call an order block. It is the point where my contracts are located. So if they place their first chunk of orders, it will not create a jump in price. Then they can wait for more orders before placing the next chunk of orders. So this is just a simple illustration. In this case, the market maker now decides to enter in the market. So he places his first chunk of orders at this point, and later he places the second chunk of orders at the same point after cyclic trading has been done. So this is the same principle that we are going to apply in our market maker method, right? We are going to see level 1, level 2, and usually at level 3, that is where they actually move the market with a vehement effect. It will be a fast moving level. Level 3 is always the fastest amongst all of them. So at level 3, usually they will actually introduce their first chunk of orders, which they would wish to add on the reset, right? So we had level 1, level 2, level 3, and at level 3 initiation or level 3 initiator, that is where usually most orders are located. So in this case, we'll see the market go up and then come back, and they add some more orders for the following cycle. So in this case, we'll have like this, and then later we'll see the market come back again on this part. So on the level 3 initiator, that is the order block that we should respect in our trading. So the next question is, how do we draw an order block on the charts? So for drawing an order block, simply mark the high or low of price rally and draw a rectangle around it. Extend the rectangle to the right in an empty area of the chart where price will act or react in the future. So since we've said in our methodology, we only respect third level initiator order blocks, like 1, 2, 3, right? The order block that we respect will be actually located at the start of the third level, so that we consider it as a reset point, like that. So as this move is being done from this point to there, we usually have the last red candle, right? So an order block is actually taken from the high and low of the last red candle in an upward trend. So it's the candle, the last candle before the market makers actually get into play. So if we had a candle like this one, right, we take the high and the low of this candle with a rectangle and protrude it into the empty area or into future, where we expect to see, in this case, this will be the last candle before this was a downward move, and then the market makers decides to enter. This is the last candle, and then the market go up. Would expect it to go and add more orders. So there are several order blocks that arise on charts. If you check online, there are several techniques and several contexts. However, you should note that not every order block is valid. In our case, we are actually following the market makers. So in our methodology, we use only the third level initiator candlesticks to find resetting order blocks. So that is why this topic actually came within the reset point, within the reset topic. So what we are just saying here, this is a small illustration on a card against CHF. In this case, we had level 1, right? Start of a period, end of a period. I hope you remember what we said in the previous lecture. Then start of a period, low of a period, sorry, and high of a period, low of a period, and this was third level. And as I said, third level movements usually will be very fast-paced moves, right? In this case, we can see that after we had 1, 2, and 3, we actually made a pullback to come back to the order block, which is a third level initiator. As you can see, the market came and retested this order block. Market makers were actually added positions to their initial one that they had in this zone. So basically, that is what we only use for order blocks. So let's actually go over the charts and see how this is done properly. So this is USD card, USD against card. So we are going to count levels like how we talked about them before. So this is the weekly time frame, and as a way to illustrate what we've just learned about order blocks, we can just use it even on any time frame. So in this case, we are just going to count levels on this weekly time frame using the concepts or what we have learned in our previous lecture. In this case, we can see that we had this low, and don't mind counting levels just for revision's sake. We had this low, and from that low we had a push up to this point. Therefore, we can say that this was a year of rise, right? Period separators on a weekly time frame marks a year. Another push within this point up to this zone, another push up to this point, right? So we had 3 levels going up like that. Then after that, we know that after 3 levels, we usually expect a reset if the higher time frame is not yet complete. And if we are to go on the monthly time frame, we would see that it's not yet complete. So where do resets occur? Resets occurs 1, 200 EMA, 2, 800 EMA, and 3 order blocks. But resets that occurs on order blocks are the ones that are more accurate, right? So where do we get our order block? We've said our order blocks are obtained from third level initiators. So if we are to zoom in like that, we would see that we had this as the third level rise. I hope you are not confused. 1, 2, and 3. At this point, that is where we had this last red candle. We had a move going out, and the last red candle was at this point. Let me zoom it in so that you'd see it. So this red candle, we are going to take the high, right, and the low to create a region, right, like that. So this region is already protruded into the future, right? So you can see that after finishing this third level, the market went and passed through the 200 EMA. At this point, there was no setup, so it wasn't anything important, and the market went through the 200, reached the 800, and reached our order block. So if we reach an order block, there is no need for any setup. However, setups may occur within that order block, and we will talk about setups in our next lectures. But if a setup is not issued, we can enter directly after candlestick rejection, and we will talk about that later. So in this case, this was a beautiful point of entry since we retested our order block, right? So mind you, we are on the weekly time frame, and counting levels on the weekly time frame is not very much important to us. So after that, the market makers introduced their first, they had their contracts here, they gave in another chunk, another chunk. So when you see this kind of behavior, usually they are actually splitting more positions into smaller ones. Let's say they ultimately want to have 1,000 contracts. So within this point, they actually added probably 200,000 contracts to 200 a fraction, let's just say 20%, 20%, 20% of the contracts they wish to have ultimately. So if we are now to analyze, this becomes our ultimate law where we are going to call a datum because the price is moved out from this point and is at this point. Right, so if we are now to go on the daily time frame, on the daily time frame, what can we see? We can see that we had 1, 2, and 3. Then from there, we had this zone. So this zone, if we are now to check where it occurred, we can see that it actually pierced through our order block. So if this happens, it means we might have lost. That is where we would say the market may actually play against you, right? So what we are interested in is to use these order blocks for points of market entry. So let's go on the H1 time frame to start the count and see where it actually occurred. So at this point, this is an H1 time frame. We are now going to start to count levels as a day of rise, another day of rise, and then the last day of rise, like that. What do we expect? A reset on the 200 EMA or order block. Where was our order block? It was at this point, the last candlestick high and the last candlestick low at this point, and we can see our order block actually came into play, right? Then the next cycle, can we see a day of rise? Yes. Or an impulsive rise? Yes. We had this impulsive rise, then another impulsive rise, then the last impulsive rise, like that. We had 3 levels going up, right? After that, can we see where did our order block occur? At 200, also confluencing with the 800 EMA, right? So resets, as I've said, occurs at 200, 800, and order block. So you should be able to actually see or monitor the market as it reaches those points of resets. So I know we haven't defined other forms of or behaviors of markets when they reach these zones. And don't worry, we are going to talk about those in the next lectures. So after that, we can see that the market gave us a reset, and at these points we actually anticipate that the market makers were adding more 1 2 3 4 5 6 7 8 9, adding more contracts, and if they actually pull back, give us a setup and go up, would actually enter without fear. So basically this lecture was actually to show you where resets occurs and how order blocks are determined on the charts. We actually respect those order blocks that occurs on third level initiators. Thank you for watching. So in the next lecture, we are going to be talking about the EMA simplification, which is also another important concept in actually counting levels as well as knowing where the market will take us next. On that note, see you on the next one.